We're here for NFP Day, which is probably one of the bigger, if not biggest day of the month, potentially. Labor data is really important to this market right now. For the last few years, inflation data was, the primary thing to look at. But I do think that with inflation sort of back down now, well, arguably back down, it's come a long ways down. What takes center stage? Jobs, because in the economy, there's the double whammy is where the labor market is and where price stability is. Those are the two things that the Fed, of course, looks at very closely. And in today's live stream, we're going to be reacting to the jobs numbers as they come out. We saw jobs data, unemployment rate go down to 4.2. It was a very modest, you basically could call it flat for the last few reports. That being said, what comes next could spook the markets or keep them stable. And that's why NFP is so important. If today on the unemployment rate number, you get a higher read, meaning unemployment rate rose in the month of September, then markets may get a little bit spooked out about this, right? What does the stock market want to see today? The stock market wants to see unemployment rate kind of stay sideways, in my opinion. We don't want to see this, the labor market get much worse, because then that could be recessionary, scary stuff. And you don't want to see it get too much better either, oddly enough, because that could signal that, if everybody's getting jobs, wages could start rising rapidly, which could lead to more inflation, which we all know from the last few years, too much inflation, not good. If you get really strong labor market from the US, that's going to be a bearish pressure on gold. But let me say this. We already have a bullish pressure, which is the Middle East, right? The Middle East situation, I put ME for that, is a tragic one. It's a sad one. And from a humanitarian standpoint, any loss of life, in my opinion, is just, not good and sad. So I'm taking that component out of my analysis of a market chart. It is a positive thing for the price of gold, simply because people are a bit uncertain, right? They're a bit maybe scared of what could happen, what could come next there. So that's a bullish force. Potential double whammy, if you will, would be if you got jobs data. So if jobs data comes out bad, this would be another force for gold to go higher. Let's see. We got gold, silver, oil over on the right. Here's the dollar index, the Russell 2000 index, the NASDAQ, the S&P 500, and the Dow Jones. Got all your charts here on the screen for your convenience, just so you can watch the spike jump with me. It's always a little bit of fun just to watch the spike, and then we'll get into the real work, which is breaking it down. Let's actually break down the data. Gambling is more fun playing blackjack rather than on the charts. That's so true. I appreciate it, Tyrell. Thank you very much. We will be doing some breakdowns for you in just a bit. We got our breaking news coming in. About 10 seconds to go here. Let's see what NFP has for us today. And again, we'll see how it comes out. Initial push higher for NAS and S&P, Dow Jones, Russell, all up. Gold's lower. That's going to signal to me that we just had stronger than expected data points. So let's see if that is correct. We had higher than anticipated. Average hourly earnings went up. That's positive. It's good for the dollar. Earnings went up. 254 strong jobs added and 4.1% unemployment rate. Okay, ladies and gentlemen, that is a pretty solid NFP right there. Dollar's going to love that, and there goes the dollar, guys. Boom, higher. Gold dropping pretty hard on that. Silver as well. Stocks liking it. Very good. Very good morning here. we'll see if those gains can hold. Because remember, with the thing with NFP is that, these data points can cause big jolt reactions and then spike the other way. So that being said, let's break this down together. Is this, what does this tell us? Let's break it down. Okay, so let's go one by one. Average hourly earnings. They went up more than expected. People are getting paid more slightly. Is that good or bad for what things? Well, it's good for the people who got raises, obviously. It's good for the dollar. It shows that the labor market is strong. When people are getting wage increases, you got to think employers are making money and they're passing it on to employees and they're giving them raises. They also increased and revised the previous number. Oh man, baby, we got some good numbers today. You guys ready for this? NFP, the employment change came in 254,000 jobs added compared to the forecast at 147,000. So we beat jobs data by 100K. That is good. That is solid jobs added. And they revised the previous up from 142,000 up to 159,000. Boom. People are getting wage increases. People are getting jobs. And unemployment rate went down. This is a dollar bullish day, in my view. And even if the dollar dips, I'm probably going to look for some dollar plays. Now, on my existing plays, I'm long NAS. I'm long the Russell. What else am I long in? I'm long semiconductors. So if we get some good follow through today, it's going to be potentially a pretty strong day.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Anyways, I'm long the NASDAQ, so this was a good pop here today. We'll pull up QQQ. There we go, up about $4,400 on this one. Semiconductors is another position I'm in. There we go. Very nice pop. Let's see where we're at today. 6K on the day. We'll take that. Open P&L is about 14. Nice pop on a lot of stuff here today. Nvidia is probably up today. Yeah, let's go Nvidia. I have an Nvidia position in Airbnb. I also have a Tesla position as well, which I imagine Tesla just popped on that. Yeah, there we go. It's a day for the bulls so far. We'll see if they can hold it. Well, Frank, it looks like NFP delivered the goods with some real solid jobs data points this morning. What are your thoughts on all this?
They definitely did. So wasn't really looking at the actual number, although it's good to see a beat. The revisions are up a lot. So if we look at from last month, we had 89 last month. Now this revision is 159K. Unemployment rate dropped too, so I think this is going to be a bullish day.
No, I agree. I actually was mentioning just a second ago, this actually looks real good for the dollar too. Dollar has been in a bit of a rut here and popping to the upside this morning. Definitely putting some pressure on gold. Gold looks like it's given a pullback right now, but we'll see how that plays out. We take a look at the indices here across the board. We got higher on the Russell by 1.6, leading the way. You got NASDAQ in second place, up 1.18. You got S&P up 0.8 and Dow Jones up 0.55. Frank, it just feels like we're just in a bull market. And when you're in a bull market, the market wants to keep going, and trying to fight that is a tough game to play. We've been talking about that this week. Are there worries about what's happening in the Middle East? Yes. Are there worries about the election? Yes. Are there, you can pile up worries, but at the end of the day, I go back to two things. Like, when in doubt, these are the two things I keep coming back to, Frank. I say, what is happening with interest rates, and what's happening with growth / earnings, right? So when we go through this, interest rates are still coming down. The direction is still down. It may be slower now because the jobs data looks real solid, but we also have growth, which is still there. GDP is up, jobs data is up, services PMI this week was up, ADP, JOLTS. I mean, we look at this and we say, we've got the equation here for stocks to continue regardless of all the noise. If you cut out elections, Middle East, not to say those things aren't important, they certainly are. But from a market standpoint, I do think that these two things matter the most, growth and the direction of interest rates. Would you agree? Is there anything I'm missing?
No, I agree. And I'm happy to see this sort of number come out because what we've been waiting for on gold could be happening now. We want to see gold come down because overall the dollar is going to devalue over time. I think it spiked initially because you see better jobs data. And so maybe that could indicate fewer or less aggressive rate cuts in the future. So if we can see a further pullback on gold and short-term strengthening the dollar, I'd be looking at the 2,600 level for support. And stocks, on the other hand, just continue to chug higher. And it's not really a surprise because there's not really anything fundamentally breaking. Because the labor market was the biggest worry, and seeing that the cut was justified is bullish, I think.
Yeah. Frank, we had a question in the audience I want to address really quick. We had somebody ask, why is the dollar up if they're cutting interest rates? Which is a totally fair question. But let's think about this for a second. Remember that the market is always looking ahead of time. It's trying to figure out going forward what's going to happen next. And why is the dollar up? Well, yes, the Fed has been cutting rates, but other central banks are cutting rates too. Remember, the dollar is valued relative to its peers, the euro, the pound, the Australian dollar, etc. It depends who's cutting rates the fastest. And today, with NFP coming in very strong, the Fed, who may feel more enticed to cut rates if labor data is weak, also feels less enticed to cut the rates if the labor data looks strong. Today, we got more evidence that the labor market in the United States looks strong, which means the Fed may not need to cut rates as fast as previously expected. We can look at the dollar to see the reaction there. We can also look at a maybe even more important chart, which is more, concise to that point, which is the bond market yields. Yields, the 2-year yield is up 3.83% on the day, which is a big jump, showing that the bond market is now saying, okay, rate cuts are still coming, but they may be coming a lot slower than we previously thought. Who wins in that scenario? The dollar wins, and companies that do not need rate cuts quickly may also do well. So, that's where the NASDAQ makes a lot of sense. You have a big bunch of tech companies that don't need rate cuts to continue to make good money. Just wanted to answer that question, Frank.
And small caps are up though too. So
that
I think
gets me a little more
coming up as
confused.
a result, just on good news.
And I think
Or go ahead.
the concept with small caps is a little trickier because now you have an area of the market that does really want rate cuts, but also really wants a stable economy. So it's almost like the Russell just wants to move on anything right now. Do you think we could see, Frank, what do you think the odds are that we take out this 2275 level this year and we trade much higher than that? Do you think that is like a top for the next few months, or do you think we are headed higher from there?
I don't see much movement past the highs, but if that does happen, I think small caps are probably going to be the top performer. I guess tech too, but I can see a break in highs, but I don't know how far high above it will go.
Yeah, and you mentioned technology. This is the XLK technology ETF. This is a bunch of companies. For those of you who are less familiar with ETFs, you can buy ETFs or sell ETFs, which are specialized baskets of stocks. And the technology basket has actually been beaten down a little bit recently. It's come back a ways and up on today's news. So I asked Frank that question because at the same time, I'm wondering, do you think tech can take out the highs and actually end the year higher? And I think, Frank, that I have a strong opinion, and I've been in this camp for a little bit of time, which is I just think that this year we're going to see risk on assets like further out on the risk curve do very well. Like I actually think that we've got the environment for a sweet spot for like, okay, the stock market's doing pretty well. Once you know that's like sort of the environment you're in, like you're in a bull market, that's where I think you start seeing things like Bitcoin really take off. And you start seeing, unprofitable tech companies maybe make a move higher, especially if rates continue to come down.
Yeah, well, we haven't seen the confirmation from Bitcoin yet. So until we see that break above that trend line, I mean, it already did break, but if it confirms one and stays above for some time, I do think the 70,000s are going to be in sight for price action. But right now, it's just not showing that.
Yeah.
And I think it's because the dollar is stronger.
Yeah, that puts a little pressure on Bitcoin for sure. And speaking of dollar, look at this thing. Just shot right up through this zone to zone up into this 102.7, let's call it 102.7 area. We're getting real close to that. That's a pretty key level of resistance for the bears. I mean, if it just wants to keep running though, we'll see. That actually looks like we may have found a short-term low for the dollar to me. I mean, if we take out this level, I mean, it just looks like, more upside in the short term, in my opinion.
What do you think of oil then?
That's a good question. Oil is, I would actually say that this was a bullish thing for oil today because, again, strong jobs, strong demand for oil. But you also have the Middle East stuff just throws a big question mark into the gold and oil charts for now. That being said, oil's been, very low for some time. I probably wouldn't be touching it up here, but if we got the right signals, maybe a pullback play, I could continue to see this thing bottoming out. What do you think?
I think it was good for, I guess, the economy, which is good for oil, but NFP might overshadow what's going on in the Middle East.
Yeah.
Unless we see more news, I think that oil upside could be limited as well. But we did break above the trend line, so I think that's a positive sign. Just have to see where it goes today because it looks like it gave back everything that it made today.
We saw the dollar gain almost 1%. It was a 0.76% gain, which is huge to say it was in the space of a minute, 2 minutes, roughly. So yeah, huge moves. Bashi, good to see you. I appreciate the hype there. So I am looking to get into a dollar yen short. Just a quick correction, playing the statistics here. Not looking for anything huge. I am a little bit salty because I was looking to go short on pound dollar. Literally, as news was coming, I was in a Discord call with my group, and I was saying, technically this looks really good. I'm not going to place it, but we'll mark it up and see how it would go. And this would have been a 2% gain. So I'm a little bit unhappy, but there you go. That's what you get for being safe. But yeah, anyway, let's talk about the news. Let me pull it up actually here. So essentially, since we've had the rate cut, all we've had for the dollar is positive to neutral news. Let's put it onto this week. Here. So if we look, we had JOLTS, really good numbers for JOLTS. We had ADP, good numbers. It overshot the forecast and the previous. We did have higher jobless claims, which obviously isn't great, but it wasn't too crazy. It was relatively on forecast. Hourly earnings have increased. NFP overshot by 100K or over 100K. Unemployment's decreasing. So the labor market in general is looking healthier. But yeah, I'm just a little bit cautious, although the dollar does look really nice in theory to start buying it. So if we're seeing during this period here, we saw everything essentially against the dollar. We saw an unwinding of carry trades. We saw the hawkish BOJ. We saw rate cuts getting priced in. So it was, a heavy hit on the dollar. And now we are starting to push to the upside. And of course, this is due to a lot of positive news for the dollar, along with tensions and escalations in the Middle East, which again benefits the dollar quite nicely. So is it now the season to start buying the dollar? Is Q4 the dollar's quarter? Possibly, it could be. It really depends on what you think the next Fed cut is going to be. Is it going to be another 50? Is it going to be 25? Are they going to hold? No one knows for sure, but you can come up with an educated guess and start trying to trade around that idea. I didn't trade this week, been sick, cold, going around the UK, I think. Bashi, I had that last week. Luckily not too badly, but yeah, not nice. What surprised me was the 4.1 unemployment rate that's showing a slow decrease in unemployment. Yeah, unemployment decreasing is definitely a good thing. Yeah, so I am short-term bullish on the dollar. So as I was saying in yesterday's stream, the euro dollar short is still looking really good. So unfortunately not entered yet. This would have been a great trade if I was in it, but yeah, now looking really for a pullback somewhere, maybe even just a correction of NFP, possibly enter a short position here, and start looking for a target possibly down here. This was Friday's NFP, I think, from August. I say Friday's NFP like it's not always on Friday, but there you go. So yeah, maybe targeting around here, something like this on euro dollar. So yeah, we've got relatively good data for the dollar. We've got pretty poor data for the euro coming out of the eurozone. So yeah, euro dollar definitely on the watch list, possibly for next week. Didn't blow, but I think I shouldn't have sold me buy position of gold. Shouldn't have sold. I'm not sure what you mean. Still sick. Don't trade when I'm sick. Mine's not clear. Yeah, that's a good idea. What about gold? Yeah, gold's a good point. Let's have a look. So, I think gold is still bullish. I wouldn't be upset about buying gold. Essentially, but just where, for the past. Actually, let's mark it up. Let's see. For the past 3 days, gold's been in a range. It's not done anything of any significance. Even NFP was huge numbers, but it's not really done much to gold. We had a slight breakout or move to the downside, but not sustained. So really, I'm not too interested in gold on the short time or low time frames. Daily time frame as well is having the same problem. Just a range a range. What can you do here? Really, nothing. But yeah, I think if we could see any sort of substantial pullback on gold, I'll be buying. Just because we had positive NFP, don't forget that we still have the macros. We still have overarching things for gold, such as the Middle East. We still have elections. And just because we did have a good NFP, good unemployment, it doesn't mean that we are necessarily not having a rate cut or having 25. We could still have a 50 basis point cut again. Although it's unlikely, it's definitely still on the table. So yeah, there's still things in favor for gold. Don't write it off just because of a good news release. So let's have a quick think here. I wasn't expecting to come on today, so I didn't really have much planned. But what I can do, I updated my research this morning, so I can show you that. I made it a lot more concise. So we can have a look. We'll have currencies, then we'll go to commodities, then we can go to the indices, and then we can have a look, quick cover of the global. So Australian dollar supported by Chinese stimulus, global risk sentiment, but likely to moderate as inflation slows. Canadian dollar weakened by soft oil prices, but supported by stable domestic conditions. The Swiss safe haven demand keeps Swiss strong, especially amid global political risks or geopolitical risks. weak Eurozone growth and aggressive ECB rate cuts weigh on the euro. The GBP overbought due to Bank of England's stance, expected to weaken with rate cuts in November. So this is a good point, actually, with the pound. The pound dollar seems like one of the strongest trades at the moment. We don't have a central bank divergence because they are both looking to cut. However, if you have two central banks looking to cut and you want to take the trade, you need to then look at how aggressive are those rate cuts and how long is the cutting cycle going to last. And for the pound dollar, it seems like the Bank of England is going to be much more aggressive than the Fed. Bearing in mind, traders have been buying the pound for quite some time now because the Bank of England was relatively hawkish, and obviously we know that the Federal Reserve has been quite dovish, and now that's flipped. So we are now seeing traders start selling the pound, so you could jump in on that quite easily on the next sort of pullback. The yen, volatile due to geopolitical risks and energy dependence, but expected to strengthen slightly by the end of year. New Zealand dollar gains on global risk appetite, but vulnerable to volatility. US dollar is strengthened by strong US data and geopolitical risks. US elections could drive divergence. There's nothing too interesting in commodities other than oil is being impacted by Middle Eastern tensions, but I think we all know that. The S&P faces downside risk due to high interest rates and economic uncertainty. Nasdaq vulnerable to tech earnings slowdown, elevated valuations. In terms of global stuff, I know this segment's a little bit boring, but if you listen, I'm sure you'll pick up some useful things. Middle Eastern tensions are driving volatility in oil and FX markets. US labor data shows resilience, boosting US strength. The US elections could significantly impact the USD with a stronger dollar likely under a Trump win. I've been saying this for a while, by the way. China's potential fiscal stimulus could support commodities like copper and boost the AUD. So there you go. There's your quick breakdown on the markets. Let me just pull up the Edge Finder. I noticed that we've had some interesting things on there that I've not noticed for a while. Because as I was saying at the start of the stream, I was looking for a short on the dollar yen. One of my friends pointed out this morning that dollar yen is reading as bearish on the Edge Finder as well. So if we're having a nice strong pullback here, it might present an opportunity to get short if we are following the Edge Finder here. Let me just have a quick look at the chat. I had a long position on gold, closed it earlier on strong US data. Yeah, this is why I either don't trade news at all, so I just won't place any trades if I know news is coming, or I'll hold my trades through news, because oftentimes you will see a correction of news, especially like gold's a great example. Had quite a large hit and it's almost corrected immediately. So, you know, you've got to trust what you trade. Wait, James, Trump is due to win? I don't think so. I think Kamala Harris is in the lead. As far as I know, I'm not sure, to be honest. In a buy on dollar CAD, hold or take profits? Let's see. It depends on your time frame, to be honest. If you're it's tricky. If I was you, I would hold it. We will likely see the dollar continue for at least the next 2 or 3 hours, maybe longer, maybe even into next week. So yeah, it depends on the time frame. If I was you, I'd move stops to break even or trail stops into profit and just let it run. Because I think, you know, I'm pretty positive that the dollar is going to continue its bullish run. However, I also am quite a big fan of corrections, so I'd like to see this move get corrected back to the downside and then continue up. So there you go, that's my 2 cents there. Edge Finder, we've got DAX is bullish. Oh, DAX actually does look quite nice, or did. I'm not sure if it'll have done too much right now. Yeah, so DAX looks quite good here on the H4. We've got a nice level of structure. Looks like we're coming down for this break. Well, we have broken. This looks like the retest now. I'm not sure if this is a fib level at all here. It's not quite in line with the fib, which is a bit of a shame. The problem really with DAX is the weak Eurozone data. It's not too compelling really to buy the DAX, but if you use the Edge Finder, use basic technicals, this setup could be quite attractive. Let's see. Oh, Euro Australian as well also looks really good. So I was looking for day trades on Euro Aussie here. So if we look on the daily, we can see we are quite extended to the downside here. The RSI became overbought, and we're now having a little bit of a pullback after hitting this daily level of support as well. So I'm really looking for some sort of move back to the upside. Whether it comes and retests this previous support, I don't know. Not too bothered really, but ideally it would. And once we have that, I'll start going in for some smaller time frame trades to the downside.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.